Okay, hi there guys. G'day Farrow, just let me know if you can hear me loud and clear. So it'll be a relatively quiet one today. G'day Peter. Just refresh everything. There we go. And then we'll get into it. All right, hi there guys. I'm guessing you can hear me loud and clear, so I'll get started. Thanks for joining me at, what are we now, 17th of December, so another, what is it, about a week away, Christmas Eve in a week, and then Christmas Day, so g'day Lauren. I'm guessing everyone's just as busy. It's that busy time of year, really. Work starts winding down, but everything else starts picking up. Present time, running around, party time, which is not too bad, but gets you a bit tired in the end, doesn't it? We've got a little fella's, he's doing some sort of production this evening. He's got one during the day, so that we told him that's his practice one, and he's got one for us at night. So he's been practicing that for a while. We're all keen to see that tonight. And then he's finished his first year in prep, so growing up too fast. Yeah, Farrow, can see that. Um, yeah, if anyone that's new, welcome to Trade Setup. G'day, Gino. Welcome to Trade Setup in the live stream. Just remember you can join us on Twitter, the top left-hand corner. Top right is Facebook, and then make sure to subscribe to us at YouTube at the bottom right-hand corner. Now, I know I did say I was going to try to get something together, potentially to do a live, not webinar, live chat, a live talk to a group, probably based in Melbourne, but it just was a bit hard to get organised, and the space of time just got shorter and shorter. So what I will do is next year, once we get into up and running again, just do a few more live things, and then we'll get Davin on the line chatting as well. But it most likely just be webinar, not anything live. We are going to start to look at a bit more next year, a bit more um, education offerings, even doing some mentoring, and then getting into doing a few more presentations and things like that, getting around the trap. So keep up to date with where we're at. Anyway, so the markets, let's get stuck in that. Yeah, Lauren, they grow up very fast, don't they? Now, little one's going to be in, the little girl, she's actually just behind me. She'll be in 4-year-old kinder, and off she goes to school as well. So you get away from the house, but that's good. But yeah, they grow up pretty quick. All right, let's just minimize that, and we'll get into the markets. Let's just get started. So today, honestly, I haven't got too much planned. I mean, there's not much since probably Thursday. Not a lot to talk about. We did get hammered on Friday a bit on the ASX. Where are we now? 56.07. So look, it's sort of hovering. I mean, I know it's still gradually edging lower, which is never good, um, and it makes it a bit tougher. But to be honest, I am seeing a couple of trades potentially starting to set up. So that's why I don't mind the fact that this he can grind lower if we want on the ASX, and it's still relatively extended on the weekly. It's probably going to take some time to repair on the weekly. Let me just get that up there. You can see, so that's it. That's what we want. So you can see it's getting still down in this zone. It's sort of rejecting 56. I was hoping it'd hold up a bit higher, sort of into this zone in here where there was quite a bit of buying back in 2017. There is a few things setting up, which is good. Just putting an alert today. We've got 3 on at the moment, and that one actually doesn't look too bad. And it's always a good sign if they're holding up quite nice and they're holding the structure quite well when the market's been under the pump a bit. You just think if the market does turn and start to rally, they probably could kick on quite strong because they've sort of been, everyone's not selling, but they're holding on the sidelines because of the overall market. And no one really wants to buy in such a weak market, especially when everyone's talking, the end of days or doom and gloom. It does obviously work in your psyche. There's no need to buy into something if you think you can get a better price. So it's always good when you see the structure hold up quite nicely on stocks or anything in particular, but mainly stocks when you're looking at the overall market. So the ASX is drifting lower, grinding lower. So yeah, just if you are flicking through some charts, it's probably, I mean, if you've got nothing to do on the holidays, it's good to take a break too. It's good to get away from the screens just so you don't go loopy. I tend to go a bit loopy myself, so I'm sort of looking forward to a bit of a break. But I can't help myself. I'll always just be flicking through charts and giving myself just some time to get to look through a few more charts and just build up a bit of a watch list that I can put together. And then just keep an eye on things. And it'd be mainly from the weekly charts because they're not going to move too quick. Obviously, being weekly bars, but um, yeah, I wouldn't mind just spending a bit of time, say just a day when I've got sitting on the beach, looking at the computer, and then just put together a watch list that we can work from. You know, we can see this. I mean, if this is extended and we do see a bit of a bounce, it doesn't look quite as nice on the daily. We've still got lower highs holding there, but you can see that it's pressing through these lows. Whereas before we got the market tipped over, it bounced up here. This was back in September, bounced up and took out the lows. Didn't stop. Even on this second retracement off 58, bounced off 58 to about 59.50, took out the low a lot. Then we bounced all the way back. So this is sort of the first sign where the bears are running out of steam. The bulls are starting to potentially looking to find some support zones or buy off some support zones. And that bounce, although it only really retested that lower high at around 59.50, it was still a good sign the way it bounced. Otherwise, you know, you would expect a 30 to 50% retracement on that leg, roll over before it even hit 58 potentially. Instead, it bounced all the way back, so it retraced this leg down we're just talking about. And then, of course, it ticked over. But then when you start taking out the lows, this leg lower pushed out the recent low at around 56.25, then bounced. So it's really not taking out the lows. We took out the low just below 5,600. You can see on this big red candle, took out the low, not by much before we had a couple of green candles. So it isn't, even though it's creeping lower and edging lower, it's not the weakness that we saw earlier on that trend down. So it's not like it's, and there's always going to be people going to be selling. There's still people going to be fear driven. Anyone that's, I guess, I say it's smart enough, or been watching the market and is watching the early signs, so you got out of some stocks here or just started easing out of your positions, great. If your positions are still working, that's even better. We didn't get out of anything up here. We actually just held on. We got stopped out on this bounce, I think, on a lot of our stuff, or just closed out some of the gains. So, um, yeah, it's not, when you're looking at it like this, it's easy just staying out of the market and waiting for this market because you can see the MAs are still pointing lower, waiting for the market to play out as such before you load up. It's okay to start, you know, like I said, we just send out an alert today on something and it still looks good. I wouldn't trade it if we were seeing this type of price action. I wouldn't have probably sent out a buy alert. Sorry, guys, you hear that phone tick over in a second. There you go. I wouldn't have been setting out buy alerts if you're getting this type of structure when we were right back in September, because that's a bit different. And that's only your first leg down. You don't know where we're going to from there, where the serious strength's going to come in. And that was looking very weak, as opposed to this type of move. Once you got hammered and we're sitting there, it's stretched on the weekly, stretched on the daily, stretched to the downside. So you've got to sort of question how much more selling is going to come into the market. I'm not talking selling and then we start retracing, we take out the all-time highs. I'm talking just a bit of a bounce where we can start to build, you know, whether we go. Sorry, let me get rid of that. So I'm just talking about if we do get a bit of a bounce and we can work off some nice longs, especially something that's working out quite nicely, setting up, has been holding up well. If you start getting a bit of a bounce in the market, even if it just starts to build that base and support the base, it goes sideways. You know, gets range trading rather than just bouncing straight up from here, taking out these highs and back up to gunning for 63.50. I don't think that's going to happen. I think it's going to take some time while we actually retest the base, maybe retest again, wash it out, pop back up, take out a lower high. The most important thing is taking out that lower high. Taking out the lower high doesn't mean we're heading higher. All it means is that trend down has changed, and then we have to start assessing the price action from there. So yeah, that's my take on the ASX at the moment. I still think it is bouncing around there. Now, what else have I got? Just want to look at the AS. I think we've got the US. I just want to go through a couple of charts. We'll look at the actual, not the futures, but we'll look at the index. So this is a Dow index. And we got that level around 24,175, say 24 even. It's testing down there. There's a zone that's the previous lows we had. Potentially, we did react off initially, and that was back in October. Sort of towards the end of October, did react back off after the initial sell-off, which from the highs, from the all-time highs, sold straight back down to that zone, did react off quite hard, took out the lower high, and we are pushing back down into that zone now. Not sure. I'm not sure to expect whether this is support zone is going to hold up or we're coming under fire. We start actually holding off that zone. You're still, if any sort of positivity, you want to see a good bounce, and then when it comes down to retest off a higher low. Otherwise, if it keeps taking out the lows and keeps retesting those lows, sooner or later that's probably going to crack. And we might just go down to 23, say 23.5, 23.4, 400 on the Dow. It looking like to me, if you just glance at that for the first time without this support line through here, you're probably looking at it thinking this support's going to go, and we're going to be heading down to another 500 points or so, which could be literally done in a night, the way we're going lately. And then see if that one can hold, because once that goes, that's your weekly anchor level. Your weekly anchor to this trend up. So we had this big move up, big pullback, consolidated, held those lows, and started heading back out, washed out the highs, and it was only really a washout once you get through them by a few points, really. Backed off from there, sold lower. So we'll have to see if this one can hold up. Bang, we might just consolidate sideways. Great, that's all fine and dandy. If we don't, if we press through there and we get this savage bounce, I'd be more inclined to believe we're going to build a lower high, and that could really start to cause a bit of chaos, and we'll start to head lower. Again, everything's just hinged on, it's going to be the big theme coming into the end of the year and start of next year, is what's going to happen with China and the US. China numbers, and that's pretty much why we sold off, I think, on Friday. They had some data out on retail sales and growth figures that they're slowing down. So that's not the kind of things that they want to see, and the rest of the economy saying they want to see. But maybe it's a bit of going to prompt them to make a deal with old Trumpy boy to start really negotiating and getting something done. But look, we'll just have to see how it goes through. I think it's going to be the major theme going over the next few months. Well, they got 90 days. I don't know how far into it they are before. There's no tariffs for the next 90 days, but I mean, anything could change. They seem to be willing to come to the table, willing to talk, willing to discuss. Trump's certainly spruiking that too to his contingent or the American people, talking it up a bit. So yeah, we'll just have to see if that's going to play out. I don't think anything else is unknown. The US dollar, which we had potentially pressure from a higher US dollar, that may start to ease because rate rises are. There's one probably, I think it's going to be announced the next couple of days. Interest rates in the US probably announcement of a rate rise next couple of days, but next year they were planning potentially 3 or 4. Only looking at 1 or 2 maybe at the moment, maybe not even that. But I mean, it doesn't mean we're going to get one start the first interest rate announcement start of next year. We're going to get a rate rise. They may hold that off and then raise rates the next time. Just wait to see what the inflation does and what their numbers are doing. So they may hold off. There may be no need to raise again next year. So all that's going to play into their hands. I wouldn't expect the US dollar to keep rallying higher and putting pressure on, even though the US dollar, putting pressure on, let's say commodities, currencies, all that sort of stuff. It's more what's going to put pressure on the US market, and especially now, is higher interest rates. But if that's not the case going forward, that might be one pressure that's starting to ease on this market, really tipping over this market through potentially heading south right down to support zone in longer term, really long-term support. Don't want to think about that scenario just yet. Wait and see what happens. So that's the Dow. We've got SPY, so that's the S&P. SPX, sorry, a lie. Let's get rid of that. So that's the S&P 500. I haven't really drawn too many serious lines up there, have I? So again, you've got that same sort of scenario, took out the highs, got through the highs, retraced all the way back down. You've probably got a zone a touch lower, a bit like the Dow, a touch lower, which is really a key to this leg up. Seems to have broken this longer term trend. Let's just see what the weekly's saying. Maybe you've got something else. It might be a bit harder to draw, but you might be seeing that sort of trend. We might be reverting to the mean, coming back to that sort of a trend line. We've just broken this this trend up, so this last leg up, we're correcting that at the moment. So whether or not we correct sideways, correct down, it's yet still, it's all an unknown at the moment. And there's nothing we can do until that starts playing out. I mean, if the price starts heading down to 25, say 50, I don't know if you can see this chart, it's 25.50 down here, and bounce off that, and we build a higher low off that, great. And we could just range trade between this resistance zone around 28.70 and 25.50 down here, or off this zone here, an inside zone at 2600. Again, this one, it's looking a bit ominous at the moment. We are looking like we're holding this a lower high sort of through there. Press that's your first leg down, it's your first bounce, especially on the weekly. This could be your secondary leg down. It's going to push down to this zone. We may wash it out and start to bounce. We may just blast straight through it. So probably not a bad time to take a holiday, all in all. If you've eased out of positions, it's not a bad time to take a bit of a break over Chrissy. We didn't get the Chrissy rally. Yeah, these, especially in the US, is looking a bit ominous. That's going to cap us, even if like today, we're actually just tipped over to positive territory, I think. Up 5 after getting sold off about 60 points on Friday. So yeah, it's not looking too bad at the moment. Let's just take a look at, I want to quickly have a look at maybe copper. So I think there's going to be some opportunity potentially in copper. I think copper's just biding its time at the moment. You can see these high lows are holding, and we've got a clear resistance zone, which is tested a few times at, say it's 2.86, 2.86 or 875, whatever you want to call it. But you can see the resistance zone through here, and that's on a daily chart. So price has obviously been pushing up, it's pressed all the way down. It's holding some high lows. And don't forget, if anyone's reading that trade setup article that I popped up, I'm not I don't understand a lot of the fundamentals behind it, but pretty much the physical supplies of copper is dwindling. So you got dwindling supplies, and if nothing's like mines aren't pumping out more to compensate that, then it really should be bullish for price. Now this has been happening for a while. It's not bullish on price at the moment because of what's happening with China. I mean, dwindling supply is fine, but if no one's there to buy it, if the buyers have sort of disappeared too, it sort of doesn't mean too much. But all this has got to do with tariffs now. If they work those tariffs out, I think that's why it's biding its time, just holding the higher levels because of supplies. They know, okay, it doesn't make much sense heading lower. But at the same token, if we don't get China as a buyer back, they don't start supporting copper prices by lifting their consumption or whatever you want to call it, then really not going anywhere for just in the near term anyway. So I guess that's one that could, if they do work out the issues between China and the US, that's something to keep an eye on and just look at some copper stocks. And also looking at crude, well, not gold. Gold I'm not bullish on, and everyone likes to be bullish on gold, but I'm sort of a bit of a mixed bag. I don't think physical gold's going too far. And this is why I don't like the longer term weekly. Everyone says, you buy it, times of crisis, go into gold. Not necessarily. Potentially just going into the US dollar, go into bonds, because you've got to remember too, if you've got a lot of money, the bigger funds are going to push into US dollar, buy into bonds because they got low yield at the moment. And if they're going to go anywhere, they're probably going to go up in yield. So they're going to get more bang for their buck, better returns on the physical bonds. Then they're not really, that's going to cap by buying that, buying into the US dollar, essentially putting pressure on the downside for gold. So it's going to be interesting. I'm not a big bull on gold just because it's traditional. I mean, it could be completely wrong, but this just to me, had big run up, big sell off, higher lows are holding, but this leg down and with this bit of a grind lately, you see that grind up, probably have to drag it right in. That grind up, that's not bullish for me too much. I'd rather see it sort of spike up, pull back and build a higher low, and that would be more bullish. But the fact that on the way down, they're all red candles. On the way up, it's a grind. Same here, red candles, bit of a grindy move all the way back up to this 1377. Double top here, potential lower high. That's the way I'm seeing it on the longer term charts at the moment. So I'm not too, that's why we haven't really looked at gold stocks too much, because I'm not, even though it's gold in terms of Aussie, Aussie has to keep getting sold lower for gold in terms of Aussie dollar to rally. But if that starts turning, which it has been sold quite heavily lately, sort of hovering around major lows anyway. If that bounces, then I wouldn't expect any action into our little gold miners. But again, it's all just trying to guess which way what's going. But I don't see too much on the horizon there, but I do with crude. I mean, I don't see why OPEC and Russia and all that would let the dollar per barrel sink any lower. I think basically they're going to put in the floor and start to pull back on output, on production. support that price. And then as soon as you get all these shorts that have been piling in here, waiting for more and more and more, and especially now, if China's coming to the table, I'm sort of looking for more of a bit of a bounce. But again, we've got a level at 54.27, which we can see. Let's get rid of that. 54.27 that it needs to get through, but there's a hell of a lot of fuel. If this thing just corrects sideways and then punches up through that 54.27, 54.30, then there's a lot of short sellers that basically had it very easy all the way down. On a daily chart, yep, you can see, green candle, lower high, bang. A couple of bit of contraction back up, back to the mean, bang, back to the mean, bang. Couple of green candles, bang. Some serious selling from there as well. So they've had a very easy time, and there's been, even now, this is going sideways at the moment. You may have got a few exited, but if you're following technical patterns and nothing has changed yet, this move down hasn't been broken, hasn't been violated. The sellers are still in play. The bias is still down. It's just your fundamental reasons why, if you're going to short it here, I wouldn't short it here. I'd be concerned. It still could just chop around sideways, revert back. This resistance line you can see, this resistance line back here goes sideways and then drop off drop through 50 again. We don't know. And don't forget, if proverbial hits a fan in the equity markets, they're going to rush into the dollar, putting pressure on crude oil prices as well in dollar terms. So there is still a bit of a story where this could roll over straight through 50. I remember the GFC, it went from about 100 and something bucks, got smashed down to about 30 or so a barrel, I think, if I'm right. But anyway, it did get down to around 25, 27, 30 bucks a barrel at that stage and started bouncing from there. But that was when it came off all the highs at 140. So yeah, just be wary. It's still, you want to see a punch up, pull back, build a high low, and then you're probably looking at, crude oil plays. Any questions there, guys? Feel free to put some stuff into the chat and we'll have a look at some stuff. Any stocks, or is there anything at all? Take the chance. It's a bit quieter at the moment. The market's put up 4.5 points. Looking a bit better. No, it's looking a bit better. Yeah, and then we'll go through. Like I said, I'm just going through, flicking through some stocks now. Not too many. There's a few smaller ones that look okay. Min. Yeah, put some stuff into the chat. This is MIN, Mincor. No, Mineral Resources, sorry. That's worth keeping an eye on that. I think we've got that on our list somewhere. Just looking at that weekly chart, you can see it's had a bit of a leg up, pull back, got down to about $9, had a good leg up, and that was near vertical. So the harder and faster you go up, you probably, if it's going to contract, you probably think the longer time it's going to take to contract, which it has pretty much since a good part of a year off those highs. It's been contracting with lower highs, lower lows off the highs, but we may be coming to a point now. I'll just draw it to see if we're touching down that support line, but actually in saying that, we're not, probably not at all. I wouldn't say we are. Yeah, so we've sort of broken that downtrend. So this, it's still contracting. It doesn't have to hold up. That's still your key level, your major high low. It doesn't have to hold up on this support zone. I like to draw that in because it's just a good obvious area where technically it could bounce, but it should have here, it should have popped up probably through here, start to hold higher levels like that, and then go, didn't, roll over instead. So yeah, then that could still contract. You don't really want to see it violate that $9 level. But really, you could hold up here, bounce around. You can see the candles, the weekly candles are quite big. I'm on a weekly, I think. Yeah, the weekly candles are quite big. It means volatility. It did this, especially this green candle, spiked up, took out the pretty much quite a few highs, recent daily highs, which is not too bad. But it's got a bit of work to do for me if I'm going to turn into a bull. Obviously, I think I want to see, really comes down to that there, because a lot of people can get sucked in. It can come up, they buy on the break there, it pops up straight back down again. Doesn't mean anything because it's still contracting. As long as it's holding that that resistance within that resistance line, that sloping resistance line, I'm still bearish on it. not bearish, but I'm just looking for that contraction to continue. We can contract there, can just contract it all the way down as long as it doesn't break that line. And I don't mind that kind of. It's the opposite of what we just said on crude. Crude was sort of popping back up. I wouldn't be too bullish on that kind of price action because that could easily bang straight back down. This is just a reverse. It's contracting lower, squeezing out a lot of these buyers. Potentially these buyers too. Anyone that's bought it here probably rode it through this pullback. Has seen a second good leg up there, looking great. If you bought it in here, it's going to be a time when you're just going, look, considering what's happening, I'm just squeezed out of the market, just closing out, taking my gains, and just sitting back and watching what else happens. So that action there is made to squeeze people out, put them back on the sidelines, because you always need them back on the sidelines for more fuel if this thing starts moving up again to jump back in and start chasing the market higher. So yeah, that's Min. Just keep an eye on that one. The daily doesn't look any. Look, it's daily's showing that slight signs, but again, you got to get up through, for me, through 1650. Take out 1650, potentially 18, then pull back and build your high low, and that might be something to really keep an eye on. All right. Let's look at some shorts then. Let's just look at, I can't remember what else. That's not it. What I want to get to on watch. There's a couple I just want to say, there has been a couple of shorts. MGX, I don't mind that at all. That's not a bad looking continuation. Your green candle here, it's sitting on top of the MAs. Thicken that up. Sitting on top of the MAs here, it's always a good sign. And this sort of green candle popped up through this high. MGX, sorry. Worth keeping an eye on that. Mount Gibson iron. Whoops, what have I done here? MTS was one that we were looking at short. If you've got that, just be wary. This could easily tick off down to $2. You can see that if you measure this move from the high to the low, that's your contraction, and then take it from say about $3. What does it take us? Say 370 down to give or take 250. It's $1.20, $1.20 and 3 takes you down somewhere around $1.80 even. So we could easily press through $2. It's going to be your first sort of line to stand where if that can hold up, it's going to go through, could go lower, could extend a bit harder and faster. So the weekly doesn't look so crash hot on Metcash. But yeah, we've had that as didn't look at it as a short actually, but did alert it as a potential short. But I was really just happy to clear out, just ease out of the market. MTS, NEA, and that was something that this could potentially be a short. This is just if anyone's looking for some shorts or a bit of action over the holidays, this could be one. I'll draw this up. Near map. I'll draw this up because I find it interesting. And you can see, well, technically what I'm always looking for, I think you've got this. This is the trend up, so it could be a bit of a squeeze. You just got to be careful. But really, we've had a leg up here, contraction sideways. Pretty much had a leg up here, contraction back down. Now this is a leg up, okay. But the difference between this and these weren't violated. We did, the anchors really weren't broken up until we had that contraction. So generally, when you break the anchor, say we broke the anchor through here, it got sold. And this is off a lot of high. You got sold off. So you can see back, didn't really break an anchor too much there. That sort of just kept bouncing off that anchor level. You can see that was early on, bounced off and then started taking off. And again, you're just looking for that high low, the market squeezing in and expanding, contraction into expansion, contraction into expansion. Now the problem, what I'm seeing with this one, if anyone's getting the idea of anchors and what we're talking about, you can see that market, if you break down this leg, that was the recent leg up. Okay, you can see it's quite clear. Bang, 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 expanded up, straight down. And that's just broken the anchor recently. Now, I wouldn't short that through there because your stop would have to be way up here. I'd always be looking for that lower high to press down. Okay, then it's worth potentially, say on a sell through there. You can sell on a candle structure, however you want to do your entries. But that to me is this was the leg up. Now, if this was a strong market, that this is a major lower high then in conjunction to that previous high at $1.90. So that lower high is starting to get confirmed. It's probably earlier stages up until, once you test those lows, yeah, that's a definite lower high. But this is another way where if you go back to the weekly, look at the way it's pressed up here. It's had a pullback, contracted lower, popped back up, and don't forget on the weekly too, we broke that anchor at $1.40. We've had this secondary leg up now. If that was strong, it should have kept going. You would expect it to push back up through $1.90, but instead, this looks like it's the early signs of that's falling short. So if you take it from high to low here, extrapolate that out, you could easily end up down at $1 before you know it. So fairly decent risk reward if that's the play. Taking off a little minor lower high here, take through the $1.45, it takes out $1, it heads down to takes out $1.20, heads down to about $1. That's your first leg down, back up, secondary leg down, and then over the longer term. So this is a longer term trade. It's based off this longer term chart. Does that make sense to you guys? Just breaking down that trade. And it's all, got a bit of ahead of itself here. Good pullback, but the problem is it's taking out anchors. And when you take out anchors, that in the back of your mind, you've got to be really careful if you're a bull. And if you're holding, you've got to be careful because it may mean, okay, we're running out of steam. We're not going to see any highs in the near term. So what's going to happen? Do I want to keep holding it? Or do I want to book it, sit on the sidelines and watch? Book my gains, sit on the sidelines. I'm always happy to book my gains and sit on the sidelines because if I miss out and it takes off, it doesn't really matter too much. There's always something else out there. As long as you're making use of your money, you're not wasting time holding something that's going against you and just sitting around doing nothing, and you're not jumping in, goes sideways for a year before it takes off. You just want to make the best use of your funds. So that's that one. Let's just look at what Lawrence got. So it's definitely heading south there, Lawrence. It is just bouncing off that MA, but this is not so much. You're going to be taking a short in the known. It's not the unknown. So it's slightly different. And this is off, we're on a daily. Money on a daily here too. Actually, it could be a lot of. So ideally, okay. Ideally for a short, this is extended away from the MAs. So for me, you can see it's extended on the downside as well. On the weekly, it's due for a bounce. I'm not saying I'm right or wrong, but there's a probability is off the weekly chart, it's due for a bounce. It's got a green candle just recently as well. So I'm not sure where you're looking at short it. I wouldn't be shorting it from the daily chart. I'd be waiting for that weekly lower high. And then a similar structure like we just mentioned. Let me just draw that up. So when I talk structure and price action and anchors and all that sort of stuff, for me, if we're looking at, get rid of that, this trade, let me just remember the chart. So the moment what we've had, just say we chopped around here. So the market sort of popped up. I think that's what it was doing. I'm doing this bigger weekly structure and we start sort of building those lower highs and then we've taken off to the downside. Okay, that's that leg down here, taken off through $7. So that's your $7 support. Now that's where we are right now. We're getting it a bit extended away from the MA. So it's not a high probability setup to short it here off the daily chart. It's more, okay, the daily might look fine, but sooner or later, because it's in the known, we've had this big leg down and it's come off about $8 through $7. Anyone that's watching this stock that wants to get in or is in wanting to get out, they've had ample opportunity. All right, so they're either sitting holding it or they're potentially not. There might be a few lingering buyers that go, oh, I've just had enough and they're going to bail, but whether or not that's enough to push it down because it is the known, anyone who's, you'd say, on the ball and has been watching it and has got a good defense strategy, good plan in place, would be out a bit earlier than that. If they were holding a long position or if they were going to short it, they probably would have shorted it somewhere in this region. I don't know what was setting up there on the daily, but potentially off this lower high here, pressed down, bounced up to 770, you'd be looking at that as a short because it took out all these previous lows. Great spot there. And that was more in the unknown. So if you flick it down to the daily, it was about here somewhere. So that, for me, prime. Bounced up, tried to get up, rejected higher levels, started coming down. You could have taken that on a candle, a couple of red days, take it through that 735. You've got your stop up here. It's turned out really, really well. So does that make sense, just what we're talking about with the known and the unknown? So this is the unknown. There's sort of a zone up here is the unknown. Down here, it's well and truly the known. So if that's the case, I'll be looking off the weekly for more of a bounce. So if I'm going to, I don't disagree with you at all. I think the weekly chart is primed. I mean, I would just want to see maybe some corrective action. You'd want to see this type of thing. It pops back up, and then basically you're getting that same structure. You've got these little inside lower high. That's going to be a major lower high on the weekly, and then you can press down. So then at least in your sights, you've got probably a good, at least 1-to-1 potentially. If all things plays out well, just to get back down to that low, and if it extends through that low, great, you've got 2-to-1 on your side, and definitely a short sell. But I would just be looking for that weekly to start popping up first. Does that make sense? I mean, that this here, even though you got a red candle, could fall short at 670 and start backing and filling a bit more. And we've got this leg down that's really had nothing but red. One green day, a few more red days, a little green inside bar, starting to expand back up. So, and all in conjunction with that weekly chart of being oversold. Hope that makes sense anyway. What was the other one? ORI. Just looking at that daily, I wouldn't be convinced of a short on that at all. What's the weekly saying? Yeah, just analyze, just look at the legs there, Laurent. This could be rolling over. I mean, it is. It's looking like it's holding lower lows, holding lower highs. Pointing the wrong side. Lower lows here, lower highs here, lower highs, lower. Well, pretty much lower high. But this contraction in comparison to the last major leg, so you got to split it up. What are your major legs? What, up or down or sideways, or what's happening? So you've had some weakness coming here. All right, so that's pretty clear cut. It's come off the highs here, press back up. That's a double top. I don't know what actions before that. Sold off quite heavily, if that's a word. Washed out the lows, started retreating, started rallying back up. Now this move up was quite good. You can see it was quite strong. It extended up, minor pullbacks, shallow pullbacks, extended up, shallow pullback, right up until we got up here. That was below this level. Okay, that's great. So that's looking weak at that stage. You're going, okay, we're starting to fall short. As soon as we broke down, you can see this on this red candle, maybe on the back of bad news, took out this pretty much anchor level around 1925, 1950, just here. We broke down through here. That's weakness, and you've got to say this is a major lower high in comparison to this level up here. But we've had this two big legs, and these two big legs, quite bearish, quite bullish. What you see now, the dynamics are slightly changed. You've got to be wary. So we've had this push down, yep. We've had a bit of a grind back up. It tried to go back up, tried to refill the gap a bit, and then comes selling back down again. But we've pretty much bounced. These couple of green candles, we've bounced, and we're not taking out the lows. So for me, all of this action is more of a grind down. It's not the same as this. It's not the same as this action back up. And this is coming off this lower high. So I'd say that there's quite a few bears out there, longer term, and we are on the weekly, I think. We're on the weekly, but this action here, just what I've drawn up in yellow, is not strongly bearish. It was initially here, then we reacted back up. So we reacted, this is your leg down. We retraced about, say, 75% of that move down. Probably more, 80% of that move down. All right. And if it was weak, you shouldn't really be retracing 80% down. You probably should have fell over from here and come all the way back down, or, shallow retracements back up, down, shallow retracement, down, shallow retracement, down, just like this, but in reverse. Instead, we've had deep retracement, pull back, high, low here, pop back up, and then come all the way back down again, took out this low, yeah, but not convincingly. And all this action, you can see a couple of greens, couple of reds, couple of greens, couple of reds. That's not strong bearish. That's more the bulls are putting up a fight again, as opposed to this. The bulls not putting up a fight at all. They're just getting hammered. Sellers are getting, hammering the price down. They put up a bit of a fight here, got a lower high. So that longer term, that lower high in conjunction to up here is bearish, but there's still some bulls in here fighting back. Does that make sense? So just this price action would leave me a bit wary, especially the fact that we're coming back down to touch that 1675 zone. Now we got a green candle, well, this week, today. And you factor that in, because just look back on this weekly. So a lot of the times it'll wash out a level when it comes in and then kicks back up again, or reverse in the other way. A lot of the times it can come back down. It's more when the market's moving down. It comes back down, and all the bears that have been selling in here it falls short, but it is like an inside level, a previous level of support zone. Does that make sense? So I can touch on it and start to bounce back up. And what it's going to do is it's just sucking in a few sellers and turn around and squeeze them back out and try to build that momentum for a rally. I'm not saying that's going to happen, but to me, that's looking more likely than this continuing lower through 1600. I mean, it could easily do that, but just all this price action, we've had one, two. This is, you're asking for a third leg down when it doesn't look that, the bears don't look like they're well and truly in control at the moment at all. So it's just to take note. And if you just flick down to the daily, look at the daily. We've had this little pop up that was quite strong. So this is in reverse. We're having this grind down, one up, lower high, two, and we can't get down to these previous lows at 16. So that's not, for me, that's your two legs down. It's not fully bearish either. This looks like it's potentially going to hold up around that 1660, which is that inside level we just mentioned from here, and start to pop up. Right or wrong, who knows what we're going to happen. But I'm not inclined to get bearish on this one at the moment. Does that make sense? I hope this is making sense to you, Lauren. But that's just by analyzing, just reading, trying to read into what you're seeing, using different chart levels. You can even drop it down. Well, what's the half an hour chart saying? Drop it down intraday just to see what that's saying. I mean, this is not bearish, is it? Either this is the last few days. The market's pressed down, lifted up, pressed down, took out the lows on Friday, which is probably expected considering what happened Friday. Straight back up again into this resistance zone at 1730. So this could easily hold up here, bang, up through 1730, start testing up towards, and it could be the start of a new leg up as it sucks in some buyers up to 18 bucks. But we'll have to wait and see. All right, so this is, again, it's not so much the unknown anymore. It's had a couple of legs down on the weekly and the daily. So this is, you're not selling into the unknown, trying to take it at a prime level. You sort of come in late to the party. And I'd hate to say it, but you could be the fuel that's going to get squeezed back out on a retracement and a rally. All right. GWA. All right, so GW, look at this monthly. It's just massive. It's quite clear, potentially these dynamics have changed. And looking at this monthly, we don't really need to draw it up. You can see it's been consolidating for years now, probably what, 8, 9, 10 years. Between these lows, roughly about $8.80 and up the highs around at 380. All right, press down, pop back up. I know this is really longer term. Press back down again, bounced off those lows. So it was just consolidating or range trading between these two levels. But it pretty much took out any key level. This moved down. There was nothing really to hold it up. Straight back down, then straight back up, straight back down. That was a bit more, you can see it was starting to edge low. It was a bit more choppy as opposed to this move down. Then it's back up. Then what we see now, there's a level here. Clearly, it's probably better seen on the weekly through about a 250. Okay, it's popped up, pulled back to 250, pop back up again, come all the way back into that 250 zone where buyers started supporting it again and reacted higher. You even got your higher low in here and pressed up to new highs to the top end of that range, that previous range we just spoke about on the monthly. But even probably took out the previous highs. It got just below $4, took out this high, took out these highs as well. So that's a bit more bullish on this time back up again. Now we're straight back down. We've been extended also on this pushback down to 250. So yeah, I think we could react back up off this 250 zone, and you can see it's just taken out $3. It is, look, the fact that it's bounced back up and sort of washed out that $3 zone leads me to believe that we might find some support off 250, or longer term finding some support. And we're sort of getting out of this up down, that range trading scenario to build that major higher low at 250. Does that make sense? So it's definitely a level, I think, to watch. But again, I'd be inclined to be, where am I going? Oh, here we go. I'm inclined to find support. Here we go. Let's just draw this up around 250. That's your key level. You've got a level through here. We just washed it out. So you've got your two zones. I wouldn't buy it just yet because nothing's proven until we break up through there. And then you want to pull back. So basically, you're just looking for let me change colors. I like pretty colors. So just say this is the press down. We've come from the top. That's our resistance zone. We've pretty much chopped around here a bit before popping up, and we're somewhere around here. Again, you just want to see, you don't want to see these lows taken out and then way down here. You want to see it potentially just chop around here. And then if it can chop around here and hold another inside level, I'd be potentially willing to buy that because you've got a key support. You've just popped up through the recent high, just below 3. It's only by a few cents potentially, but you're potentially holding this inside level, and it gives you, if you can get something that's, you get the pullback and then you get these little inside high lows and you get a clear level to buy through, it's giving you all your risk. You know where your risk is, just below there. If it breaks up and through, what this is a major high low, which could be enough, and the longer this takes to consolidate through here, if it's around 280, say 285 or even 275, the longer it takes through there, the more bullish I think that'll be, and that'll be a high low to work from for a push up and through 3. And then you could be targeting, and you're going to have 320, then you got right up to 360, even right up to these highs at 390. So risk reward can be really good off that one. Does that make sense there, Peter? Unless you're talking about going short. But yeah, that's ideally what I'd be looking for. If I'm going to work my longs, even if we just from here, we just pop up, we do a different scenario. Let me just get through all this. Just say we pull back here and we go up, then I'll be looking for a pullback to that breakout zone for a potential buy, because that's clear. Once you get up and you pull back into that zone, it's a clear break of $3. It's pulling back. It's your first sort of zone where you're going to drag some buyers into it. So you're going to create some interest, starts holding up there. You're going to get all those secondary sort of buyers that are not so aggressive. They're not buying off this low, like myself, pretty much. They're going to wait for a bit more confirmation and then jump in from there. And again, you're still looking. You're just getting a less risky trade. I think it's more confirmation on that trade. You're giving up a few cents, but you could still have a great 2-3 to 1. Does that make sense? So yeah, I think that one's a bit of a half decent one there. Anything else you want me to quickly look at, guys? Is there anything you want to chuck in there? Up 9. Let's just click out. I don't even know where the banks are. Down today. Not happy on the banks still. Yeah, pretty weak, aren't they? See how they go. All right, JB, just checking out, see if there's a couple that we can just talk about. MCore. We've got a weekly and a daily chart. It's daily, it's more weekly. TGR, get up there. All right, there's nothing else, guys. We might just call it a day nice and early. It is getting into Christmas after all. NAB. Let's have a look at that then. Yeah, look, it's down there, isn't it? It could always get cheaper, that's the thing. You got this inside level, which looks like it's going to plow through, which is pretty much 24, give or take. It's through there now, but we're talking it could be a wash out of that zone. Traditionally, what I normally look at from high to low, take it from that high to that low, it's going to take you somewhere around 20, which sort of makes sense to us. It's been down there before, only briefly, before it started lifting, or it could fall short around that 22 mark. I mean, it could get cheaper, but if this is a longer term play for you, yeah, definitely. There's nothing to say. I mean, these banks have been hammered a bit, obviously, but if there is, GFC style event, things can get cheaper quickly, and then start to rebuild. But we'll just have to wait and see. It's definitely trend is down. That weekly's down, so that's your monthly's down, weekly's down, daily's down. I tend to steer clear of buying into that. EXL, let's have a look. I'll just keep watching those banks because you know that they're money-making machines, and they're probably going to be harder to trade. I don't think they trade as cleanly. They just, when they go, they go. And they can go quite hard before you get your first pullback and you give up a lot. But in essence, they're harder to trade like that. We're just finishing the last of that coffee. What's this? EXL. Okay, no data. That's definitely curving up, and it's good. Look at the price action here. Let's just draw it up. I think it's extended. I wouldn't buy it up at these levels because what goes up must come down. But all in all, you had your level there. I don't know if that was probably the first when it started, when it floated. Popped up, you get the initial, on the board, pre-float, pre-IPO, sell-off. Good bounce back up. This is when you potentially got anyone else that want to sell and get out, books and gains, or weren't too confident. But you can see that this moved down, the angle of descent there, a lot different to this initial angle of descent. So that's a good support. And that coupled with a whole lot of touches on, it was around 135. 1, 2, 3, 4. That's why it led to a good bullish move, and that's a high low. Okay, this is all comes into a high low with respect to what was it, around 125 level here, and this big level here, high low. Of course, you measure that from low to high, probably very similar. This move up, good pullback on two legs, and then we're rallying again. So whether this leg could be very much equal to that initial leg up, this leg up and this leg, but either way, I think you get into the long end of it. You're not in the unknown anymore. You pretty much get into the known. It's probably getting to the potentially the end of that move up, especially with this gap up and these couple of red candles on the pullback, and that's pretty steep. That pop, all these sorts of things. So what I'd ideally be looking for is sort of reversion to the mean. If that's your support zone, it's got a long way off that. It could easily revert back to the MAs, start to hold a high low. I want to see it pop down. I want to see some work put in from the buyers. Whether you get this sort of contraction, that sort of level, building a higher low at 210 or so. This is all your higher level off your longer term charts, but this is just your intraday, your daily action off your weekly chart. Does that make sense, you guys? So this type of action, I'm saying this is going to be a high low, whether we're coming all the way back down here or whether this takes time, your support zone catches up. Either way, I think this is a bit extended. You want a few of these buys squeezed out of the market. You want to see ideally it start to curve, hold some really minor higher levels as the buyers and sellers are coming to that point of agreement, and then you're just basically picking on a break, minimizing your risk and see if you can trade up to 250 again. Yeah, I think it's probably a bit late, but that overall price action is quite good. Not too bad at all. Haven't got a clue what they do. Yeah, but worth just keeping an eye on that. All right, guys. So I think we just got through a few extras there. If there's any questions, feel free to send through an email to support@tradesetup.com.au. And also, as a bit of a request, if there's anything that you think, any way we can improve, if there's anything you'd like to see us do, like I said, we want to start getting into a bit of potentially going to start doing more talks, more seminars, getting on the road a bit, offering some, some paid content with education, looking at some mentoring as well. I think mentoring is always a good way to go if you're up for it. Yeah, if there's anything we can do to help or you think to improve, just let us know. We're coming to the end of the year. Going to have a bit of a break, wind down a bit. We've got one more stream on Thursday. I'll do that stream on Thursday, and then I'm off for a while. So if you try to join in the Monday after pre-Christmas, we won't be on. I'll be back on somewhere around the 8th of Jan, I'm guessing. I can't quite remember now. I have to make sure of that before we leave. But it'll be after that. If you're on TradeSetup, you'll get an alert out. I'll send an alert out hopefully this afternoon or later on today, even tomorrow morning if I don't get a chance today. Send that out just saying the dates we're going to be winding down on TradeSetup. So there won't be any new alerts as such, any morning reports, but I will be following the alerts we have running at the moment and just continue to manage those. If there's anything we need to do, I'll let you know via the app. Anyone that's not part of TradeSetup can just listen in on here. Yeah, we'll be streaming on Thursday, and then we're pretty much going to go down to one. So next year, just do one a week, one stream a week as we start to build some other areas, build into some other areas. But if any ideas, anything you may have that you think we can help us improve, feel free to send through an email. Be much appreciated. any comments you may have. Even if it's negative, I don't mind. Big boy, I can take it. Anyway, guys, thank you very much for joining us again. Much appreciated. Have a great day, and we'll speak to you again on Thursday. Cheers, guys. Enjoy your day. Bye.